Literally, with enough time, a tiny amount of money can grow into like $1 million. That's absolutely doable. Time is the most important thing.
I think if we accomplish one goal, I think we set for ourselves one goal with this episode is to get people to legitimately pause before going out to spend money on material gifts and to get them to think, I can do so much better.
If they haven't figured out what their Christmas gift is going to be this year, you could help them make their Christmas gift to their kid be the gift of investing.
What is it that's stopping you from taking 30 minutes out of your life to make, a really massive difference to this young person's future well-being?
For an advertising-free version of this show, check out wallstreetwildlife.com.
Welcome to the Deep Investing Jungle with your hosts, Luke the Badger Hallard and Christoph the Monkey Pikasti. This week, we are revisiting episode 60 from last December, and we're going to talk about the incredibly important topic of investing for your kids.
Badge, people mess this up so bad, and we're going to help them out so hard in this episode. You know how they mess things up?
How do they mess it up?
Because it's the holiday season and they start thinking immediately what kind of garbage new thing that their kid or their friend or their young person needs that they don't really need. And then they go buy that thing, and then that thing is in the, wastebasket or in the drawer like 3 weeks later, and no one's the better for it. We have a better plan.
Yeah, you got it. If your kid's you're generally receiving landfill. If you're an adult, you're probably getting socks. I like a nice pair of socks. I'm an old guy, but stocks are better than socks.
Here you go. That's the new tagline. This is a serious issue. I'm not faultless in this either. I don't mind. I'm a gift giver, by the way, Badge. I love giving gifts. I love how it feels. I like a nice, well, thoughtful gift, like really chosen from the heart. But most people, I'm going hard on this and saying, most people don't do that. Most people just say, let me buy some materialistic thing to show somebody that I thought of them, and they're throwing money out. And what we're going to tell you is that not only are you throwing your money out, but it doesn't have that much of an impact on the person receiving it, because it's just like material goods swapping. It's like, here's some thing. Whereas if you thought a little bit longer about what kind of gift could have a longer, deeper impact for the rest of a person's life, you would immediately realize that helping them invest and or open up an investing account will be life-changing, literally life-changing for months and years and decades of this person's life, like that literal gift that keeps on giving and giving and giving and giving. So listen to what we have to tell you, right? Listen.
And if you don't have kids, right, we're still going to tell you some stuff will be useful to you as an adult new investor. I want to give a specific shout out to Rafi, my piano teacher, who is inundating me with questions every time I go sit over his place to play piano about becoming an investor. I'm like, dude, check out episode 109, which we're going to publish at the start of December. And that will tell you everything you need to know to get started as an investor.
Yeah, and I'm glad you said that, Badge. I have a stepdaughter, so that came to me a little later in life. So I never had a little crawling kind of kid. But I'm a godfather, and I have all my friends having kids. So I'm, Uncle Monkey, in a lot of different ways. And I'm faced with the same exact temptation or question. What should I get all these whippersnappers for the holidays, right? And I'm now, in part, by the way, Badge, in part because of the last time we recorded this kind of episode, I am now 100% in the camp that Monkey's not going to give any of these whippersnappers anything but either direct investing, I buy something for them in an account, or if they're a little older, a lesson about investing, or some combination of come here, kiddo. Your gift from Uncle Monkey is an hour of my time with you sitting down and helping you open an account or whatever the step may be. That is the only gift anybody again from Uncle Monkey going forward. And I know it's the way.
And if you get this really right, if you get your own kids or kids in your extended family or friend group started as an investor, magical things can happen. I bought investment gifts for a bunch of kids of my closest friends last year, and is now investing like a few pounds of her own pocket money every week into that investment account, and she's buying more stocks. So she's now a 13-year-old investor, and that is going to change her life.
I know. I mean, seriously, can you imagine the difference of, I mean, if you take our own time machine back of, say, being 14 years old or whatever, 12, 14 years old, right? And because your parents, having listened to our show, opened up an account for them when they were 3 or whatever, right? Added a little bit, whatever, monthly, bi-yearly, doesn't matter. And now all of a sudden you're 12 or 13 and you open up your account and you have like $8,000 sitting in there, right? Whereas, you know, your summer job, you get, you know, tiny little paychecks, you know, as a lifeguard or whatever. And you know, as this 12-year-old, you have 20 times more money than all your friends because of what your parents did. You just think about the world in a whole different way. And I mean, it's just I don't know, the impact of this can be so huge and it's not that complicated.
It's easy. It's easy. We're going to give you an easy roadmap over the next 30 minutes. And then we're going to give you a slightly more advanced version over the following 30 minutes. You could literally have this set up in the time it takes you to listen to this episode. It is that easy.
Right. So should we get started on the actual steps?
Let's do it. I want to attack one thing, because not all investments are the same. And the stock market, like owning shares in the world's most incredible companies, is how you create long-term, life-changing returns. And if you start like a kid's investment journey started when they're, you know, 4, 5, 6, 10 years old, they are the definition of a long-term investor. They have decades ahead of them before they theoretically need to touch that body. I thought I'd bring this to life because I know gold has been incredibly popular over the last couple of years. I've got a couple of pictures to show you. Let's take a look, first of all, at gold versus the S&P 500 over the last 3 years. And if you can't see like the little squiggly numbers on the YouTube, basically over the last 3 years, the S&P 500 is like a collection of the 500 biggest companies in America. There are other indexes for other countries. If you owned the S&P 500, over the last 3 years, you're up 75%. That's a nice return. But if you owned gold, you're up 133%. So for the last 3 years, gold has done incredibly well. And that's why you're seeing all these gold articles right now about gold being an incredible asset class. But if you zoom out a little bit to 10 years, they're kind of break even. Over the last 10 years, the S&P 500 has delivered 284% return, and gold has delivered 269%. So essentially the same, like S&P just edging out. But now if you really zoom out, and the S&P's only been around since 2010, so that's about coming up 16 years, 15, 16 years, that's where you see the difference. So owning stocks over the long term, like in this case, 15 years, if you owned gold, you're up 209%. If you owned the stock market, the S&P, you're up 710%. So that's like a massive difference. And I know some things will come in and out of fashion in terms of investing, and people might be like really pro property or gold or cash or treasury bond bills or, you know, whatever kind of stuff you hear about. But really, you want to keep it simple. You buy a passive index tracker, which is essentially a big grouping of stocks, and you just own that for a long time. And you're going to, over a long enough period, you're going to outperform almost every other asset class that exists.
Yes, sir. And it could be as simple as that. I don't have much more to add. Badge, you know where I want to start with, though, before we get to the nitty gritty, is to, because this is a holiday episode, right? So we really are thinking in the spirit of gift giving. The first thing that I think about is the gift for the young person. Are they really, really young, or are they more mature, and by more mature, I'm starting to think like 10, maybe 10 and older. Maybe it could be even a little younger than that. 8, 9, something like that. 10, between 8, whatever. Where they could actually begin learning about investing. So it's like two forks. Parents just doing things for their kid on the child's behalf versus involving the child or young person in the process. And to me, that makes a difference in the kind of approach. The first one is basically talking to the parents. The second one, meaning like, here's a gift, right? In the first case, I'm not going to give an investing gift to the 3-year-old. I'm going to give it to the parents. The second case, my call it 19-year-old niece, I'm actually going to put a thing in the box that says lessons with Uncle Monkey about investing plus $100 to go into the account. 2 kinds of gifts like that. You see what I'm saying?
So there's sort of two ways to look at that, right? Like, you can have an account, and there's ways to do it in the UK for sure, and I'm sure there is in the US, where the kid owns the assets. It doesn't have to go into the parent's name. And I think actually that's quite a healthy thing to do, because situations can change over the long period. And if you're giving a gift to the kid, you want to make sure the kid gets it. But I think that the nuance that you're drawing out there is, you can't really have a conversation with a 3-year-old easily about what it means to be an investor and to own, maybe you could to a really limited extent, about, maybe to be like a Disney shareholder, something like that, or a Roblox shareholder, like brands they might have heard of. But 3 is pretty young. But what certainly, and 7, 8, 9, 10-year-old could start to understand that stuff. You could even, if you wanted to give them like a specific stock, which you don't have to do if you want to do that, even give them like a couple of options and let them choose, and they have a bit of agency in like picking the stocks in their portfolio.
Right. That's what makes it an interesting gift. That's what makes it a good gift. And it's quality time, and it's time spent, and it's educational and so forth. So I just know, I suppose, that the first decision you need to make, if you're thinking of giving investing as a gift, is it for the parents or is it for the kid directly? Even though it's both, obviously, for the person receiving it. And if it's essentially the first kind, then we'll walk you through the exact specifics in a bit, but it's more like you open up an account that's a kind of custodial account, and you say to yourself, in the name of my child, I am going to keep putting money into this custodial account at whatever rate, and I'm basically helping them save money rather than throwing it out on stupid gifts. That's kind of path one. The second path, the one that I'm actually involved in, since all my younger baby monkeys, monkey cousins, and they are of age, and so I, together with them, help them manage their own account, and I educate them, saying, your uncle just put $200 into your account. What should we do with this? Or that kind of, conversation.
So I'll make a suggestion. Let's put that stuff to the back of the episode today, because I think we should start off like for somebody who knows nothing, doesn't even know what the stock market is. Hopefully we've told you why this is important. And literally with enough time, a tiny amount of money can grow into like $1 million. That's absolutely doable. Time is the most important thing, which is why starting early is the most important thing. But I think let's just break it down and try and give some really clear, simple advice to someone who just doesn't know where to start, how to get this account set up, and what to buy, basically. If you're in the US and you want to start investing for your kids, what do you do?
Okay, Badge. As simple as I can make it. You're going to go to either Fidelity or Charles Schwab. You Google or type in fidelity.com, charlesschwab.com. Great. Once you're there, you're going to open up a custodial brokerage with the acronyms UGMA. If you have a hard time, for whatever reason, you can't find that thing on their website, you press the contact button and you say, hey, I'm trying to open up a custodial brokerage account for my young buddy. I want a UGMA account. Great. They help you set it up. You open it up. Next thing you're going to do is deposit some money into that account. And then the last thing is the kind of thing you buy with it, which is, in this case, VOO, the Vanguard S&P 500 index, and you're done.
That's it. That was really simple. And it's literally as simple as that. And you could have this account created in like a couple of hours. Like you might have to, show like an ID and stuff to get it set up. What is
It's
VO?
actually, no, bad. It won't take a couple of hours. I mean, unless you get caught in some diabolical thing. I mean, it's opening up a website, they try to make it as easy. I'd be shocked if this takes longer than 45 minutes tops for most people.
All right, we'll come back to what you're going to buy in a bit, but let me just catch up with you and give some advice to our UK listeners. And if you're in like Europe or somewhere else, like it's easy to figure this stuff out. Just go Google, like, how do I invest in my kids? But we're going to give you, Christoph gave you really straightforward, simple instructions for a US investor, US family. If you're a UK family, we have a really simple account called the Junior ISA. And it is offered by a bunch of brokers. The easiest one to use that I would recommend is a company called AJ Bell. And you can find them by typing youinvest.co.uk, youinvest.co.uk. And create an account on there. Say you want to open a junior ISA, and you have to give a few details of your kid, like their date of birth and stuff like that. And then you've got the account set up, and then you just fund it with some money, and you're ready to buy VWRP. But we'll come on to that in a sec, what you're going to buy. Like what we've just told you are the super simple instructions. And actually, I know you can do that junior ISA thing in like under 10 minutes because my cousins between them just had their 5th kid, and we just opened maybe the 6th kid, I'm losing track. And we just opened like another account for one of them, and they got it done with me like helping them by email, but they got it done in minutes.
Yeah, I mean, I don't think we have to anybody right now that feels confused or unsure about, I would pause and say, like, what is it that's stopping you from taking 30 minutes out of your life to make, a really massive difference to this young person's future well-being? This could not be easier. And the only thing I would add is we're in 2025. If you're scared by the acronym UGMAU, then just open up your favorite GPT model, Perplexity or whatever you use, or even in Google, and say, I want to open up a custodial account for my kid. What do I do? And then you just follow those directions. This is not right now confusing about execution. There's nothing confusing about this. It's all about, I think, your inner psychological state and getting out from, I need to buy a physical gift versus, oh no, I need to do this other thing. Once you've made that decision, I mean, it's not complicated.
I've been doing this for over a decade for my niece, and then more recently for like my cousin's kids, and even more recently for my friends' kids. These gifts are making a serious difference. Like some of these accounts are now turning into something that will pay for a whole education, like university education, maybe even be like a down deposit, like a down payment on a house. Just helps a kid get started in life, and it helps you as the parent, because the kid won't be so dependent on like the bank of mum and dad, because they have their own assets to fund. And it means they won't come out of college with this like 6-figure debt hanging over them, because they could use this money, small amount of money you invested decades ago, and it's grown into something quite material over time.
Badge, Monkey is primed to go on a major rant right now, so hold me back. This is a whole nother episode. I just read this thing about a modern economist talking about what the actual poverty line is today. It used to be $40,000. Now it's close to $140,000. And it's really actually terrifying and true. And I think when I hear you say this, I can't say this with more sincerity. Having an uncle Badger like you that legitimately took off this massive debt burden, or it eased this massive debt burden of childcare or funding a young person's education because you made one simple decision, right, to start this kind of fund for the young person. I mean, my God, like with the difference between Uncle Badger, who paid for their college education, right, and freed them from a life of debt and in servitude, versus, oh yeah, and Uncle Monkey got them a Lego set. You know, like, I mean, the difference could not be more wide and life altering. So I don't know. I know I'm preaching again, but I guess that's the point of this episode, right? Like, are you hearing we're yelling at you?
And like a personal anecdote, right? I'm turning 54, I think. Yeah, that's right. Yeah. Like I didn't start investing until I was 30. Well, not 13, like my cousin's kid, my friend's kid. 30. But I retired when I was 49, right? And that was, I had a good job and I was able to pay like a decent amount of money into my investment account. But just, give or take 20 years of focusing on investing over like spending money on frivolous shit, basically, I didn't need, has changed my life. And like the last 5 years have just been incredible. And you can do that for your kid. You don't want to give them so much that they never have to work. We'll come to that at the back of the episode. I think there is some nuance there. But, certainly mitigating the cost of an education or getting onto the ladder of owning property, like that's a really serious, just like nice start in life that allows you the freedom to do kind of what you want to do.
Yeah, exactly so. So we're a nation of debt holders, and this is one direct way out, and it just couldn't be simpler. So let's move on. I already briefly went by this a little fast, but I'll reiterate. So you open the account, right? You set yourself up as the legal guardian, and you have the designee all lined up. So what do you buy? For this particular purpose, for the person that just wants to do the absolute minimum, doesn't even care about investing, doesn't whatever, blah, blah, blah. You buy VOO. It's a Vanguard index that tracks the S&P 500. It's going to go up and down as the market goes up and down. And over the long run, it's going to make you a lot of money. And it's as risky, or it's as low risk as investing in the stock market as it can be. And that's all you do. You buy that thing. And the only other decision is, do you want it to be a recurring gift? So, to let's say, stop worrying about, oh, did I invest more, or did I add more to it? How long ago did I add? You put it on some time frame appropriate to you, the gift giver. Maybe it is a once a year gift. So once a year, you set it to add 200 bananas, right? And then every year that child gets 200 bananas from you for, the next 18 years. That's still going to add up to be quite a chunk. Or if you're more generous, you do it, you add, let's say, $25 every month, or whatever the case may be. And that's the gift I would give to the actual parent, like a card or something, like I've opened this account. It's getting $25 every month. Here you go. Happy holidays. I love you all, and you're welcome.
Yeah. And if you're the parent, maybe you as the parent, you probably had to open the custodial account. But maybe you then send like the details out to the grandparents and the friends and say, like, rather than buying landfill for my kid, like, why don't you contribute to their investment future? And like, this is the place to send the money to this kid's account.
Yeah. Oh, that's brilliant. Right. Make it a team. Yeah, there you go. That's brilliant. Right. You bring in the rest of the clan, nurture this young person together, and everybody now has a place to deposit that money. And today, with the way it's so easy to send money back and forth, right? PayPal, Venmo. I mean, it's even plausible for me to say, like, Badge, you want to, or let's say I want to help your niece out. So I'm going to, send you 50 bananas via Wise, put that in, young Bobby's account for me. Make sure it comes with a banana under their, holiday tree, and then done. You take care of the rest, right? Team effort.
So you gave us the roadmap for the US, and it was, you get that account open, put money in, open VOO, which is the S&P 500, which is essentially the 500 biggest companies in America. If you're a UK investor, I'm going to recommend something slightly different. You've got your account opened with AJ Bell, You Invest. Instead of VOO, I'm going to recommend you buy VWRP. So VWRP is the Vanguard FTSE All-World ETF. And instead of being like the 500 biggest companies in America, this is nearly the sort of 3,500, 4,000 biggest companies in the whole world. So over 40 countries, and it's the biggest companies essentially from like every market that matters. And you're owning the whole world there. And you couldn't be more diversified. And if you don't have to overcomplicate it more than that, like just if you want to buy both, you could buy VWRP and VOO to have a little bit of extra American concentration if you wanted it. But if you want to keep it simple, just buy VWRP. As Christoph said, every year, every quarter, whatever it is, add more money, don't sweat it, just keep adding it to VWRP, and you're going to get like a nice return, which is going to be cash in the bank. It's going to be gold. It's going to be property in the long run.
Amen. So that covers this first kind of audience, right? We want to keep it simple. We don't know anything. Just tell us what to do, and good riddance about stock picking. You want to switch and start talking about what I find the more interesting and worthwhile, not worthwhile, more interesting for me, the gift giver, which is I think of as the older age set. I want to give a gift to my, in this case, let's say goddaughter.
So we've set up the account. If you're in the US, you've got your Fidelity account. In the UK, you've got your AJ Bell account. We've put the money in, and instead of following the simple path of buying VOO or VWRP, we want to do something a bit more hands-on and interesting. So what is that interesting thing?
Okay, so now my card, or Christmas card that comes with a banana, what the young person, let's say they're 13 years old, what they see when they open up that card is Uncle Monkey has deposited 250 bananas in your custodial account, which becomes legally yours when you turn 18 or 25 or whatever. What should we buy with those 250 bananas? And then it's then you get to be creative and say, in order to figure this problem out, we need to have a call, we need to go out for coffee, we need to go get an ice cream, and we're going to sit down and we're going to think through. Is there some kind of company that you really love and you think you would like to be an owner of? And that's where the education and the how to invest and what investing is and how it works starts. But it's going to be a more active process. It's the gift of time and presence and kind of being hands-on. And then after that conversation happens, they might conclude that I want to buy 1.2 shares of Lululemon because I really love Lululemon. And then Uncle Monkey goes and purchases 1.2 shares, and there you go.
And I think Lululemon is an interesting choice there, because it's like a brand that we're all familiar with. And like stock picking doesn't have to be much more complex than that. Like, you exist in the world and you buy certain products and you use the services of certain companies, and some things you think, this is really great. I want more of this thing in the future. And some things you think, man, that was such a horrible customer experience. Like my car just broke down, whatever happened. You think that sucks. Like just applying that simple lens of like, what is the story behind this thing? That's like a big part of being a stock picker. You're using your own insight to find companies that have a compelling service. That it is more complex than that. And going back and listening to like the last 100 episodes of our podcast, every week we talk about how to identify good investments versus bad investments. But if you're just starting out and it's a couple of $100 for the kid and it creates like a really interesting conversation, like in this case, the conversation in itself is going to be really valuable because it teaches the kid to think like an owner, because that's what you are when you're a shareholder. You're an owner of these companies.
There's I think, similar but more important point here. that I think both of us are trying to express. This will be the best gift ever if the person who receives it begins to care about the company that they've invested in. So forget about finding the best investment because of whatever fancy financial metrics you could come up with. It's not about that. It's if you give 13-year-old Susie a share of a company that she and her friends are constantly talking about, Lululemon in this example, or maybe it's Apple Computer, or I don't know, maybe they like some restaurant, but it's a legit thing, but like a legitimate business. And all of a sudden, Susie, when she goes out with her friends, not only says, I really love Lululemons, and look, we all love these Lululemons, but she gets to say, and by the way, I own Lululemon. I share in the profits that this company makes. That is the thing that's going to make the big difference. So in that case, that Lynchian thing, buy what you own, buy what you love, as long as it's not, something on the verge of extinction, which you could almost tell might be happening. I mean, rarely that's rarely the case. Then you're going to be fine. Then it's the gift of enthusiasm. It's the gift of participation. It's the gift of understanding yourself as an owner.
And just to be clear, you don't have to do any of this stuff. If you want to keep it really simple, it's like the stuff we said in the first half an hour. Just buy the index. Don't sweat it. Don't worry about whether it goes up or down in the short term. Be assured that over like the 15, 20-year term, it's going to be the best risk-adjusted asset class. Like you're most likely to make the most money with that thing, irrespective of what happens in the world. But if you want to get more hands-on, then you can pick stocks. And Christoph just gave an example of Lululemon. There's hundreds and hundreds of thousands of companies out there. And you can use your own insight to pick. And if you want to get a bit more into how do you identify whether Lululemon is a good investment compared to, say, Nike, right? There's ways you can do that. There's tools you can use. They're probably not for this episode, probably for, go check out the podcast. And we talk about this stuff all the time.
Yeah. And, one of the comments we get, I think, from our Patreons is that they love our show because, most of them, not the people who canceled. The people who canceled maybe didn't love our show as much, but the majority of our, of our people, I think they tell us that we make entering this world accessible and easy on the ears. And, we're honest and transparent, and we're not financial tech bros, like in the deep weeds, even though we understand this stuff. That's not what we're kind of offering people. And so to me, it's this, again, to reiterate the process. You open the account, right? You either identify yourself as entirely passive, you pick an index fund, you're done. Or if you want more quality time, you want more presence, you want it to be educational, then you say, hey, let's talk about companies you love, then let's buy a couple of shares of each of these. And to get better at this stuff, start listening to Monkey and Badger on a weekly basis, and they're going to, school you over many years, and it's going to make all the difference. And that's a gift that kind of keeps on giving. I hope that doesn't sound too self-serving, but I think we're not trying to, I'm not trying to sell our show. I'm just saying that's how you make a gift that legitimately makes somebody wealthy and makes it fun and engaging and personal.
And I think we are doing something a bit different on Wall Street Wildlife, because there's a ton of other finance podcasts out there, but mostly they're just telling you like what to buy or what they think about stocks. They're not telling you like how to think as an investor so that you can make your own decisions. And that's really what we try to do. We tell you very transparently the things we own. You can see our live portfolios if you go to wallstreetwildlife.com. It's all there in black and white. And but we're trying to teach you to make your decisions. And, we've just launched our community portfolio, which is, we have a whole bunch of Patreons now on the show who really like the messages we're trying to tell. And now they're picking their own portfolio, but we hope that they beat us. Like we have a rolling every 1 year contest. Who can beat like Badger or Monkey portfolio? Now the jungle, like the community portfolio is in the mix as well. But I really hope our Patreons beat us using the skill that we're helping them hone.
Okay. Badge, I think we've made that point pretty clear. I want to say one additional point, and this maybe might be third case. and this is because it's personal to me. These are the young people in my life that are now over 18. So they don't necessarily need any of the custodial stuff. They don't, you've done well until that part. But my 19-year-old, right, or my 22-year-old, right, what I would actually say there is the gift would be slightly different. I would help them open up their own account in their own name. So it's a gift of, just call it counsel. And I like Robinhood. So here in the US, that's what I would do. And then once it's in their own name and everything is theirs, I would send them some money and say, here you go. Uncle Monkey just gave you $200. And then we, from there, have the conversation. I want to teach you how to invest. So let's set up a meeting once a month, once every 2 months, right? Where we talk about companies, and you got any ideas, right? And then we make it that kind of process, which turns into a habit and a lifelong. You get it's the gift of getting them started earlier than most people who think they have to wait to have a big paycheck to start investing. That's the real gift.
That's great. And by definition there, that advice you just gave applies to you if you're like an adult and you haven't started investing for yourself. Do what Christoph just said. If you're in the North America and the US, go open a Robinhood account and start investing the way we set out. You could keep it simple. You could open your own Robinhood account and you could buy VOO, or you could do the stuff we said in the last 10 minutes where you start to pick companies. Let me give you the UK version of this. And I did say, I shouted out my piano teacher at the top of the episode, like, Rafi, this is what you should do as an adult who hasn't started investing yet. The UK equivalent of Robinhood is a company called Trading 212. I use Trading 212 myself for my King of the Jungle portfolio, which is the one I used as the Badger portfolio to try and beat Christoph in a monthly contest. Super easy to create a Trading 212. And if you can, open an ISA. It's like the adult version of the junior ISA, same thing. And if you want to keep it real simple, just put all your money that you can afford to invest for the long term into VWRP. And if you want to start stock picking, well, Trading 212 ISA allows you to own like any of the thousands of greatest companies in the world, and you start doing exactly what we just talked.
Badge, perfect. Let me add one additional point I missed. Back in some previous episode, we had a conversation with the founder of Public.com. I want to add Public.com as an alternative to Robinhood. Both are excellent platforms. Both will get the job done. So Public or Robinhood for these, call it individual investors. Well, I think we should wrap things up about this topic. But as we were talking, I had what feels to me an obvious idea, intending to bring us to the spirit of wrapping this conversation up, which is so far we haven't made any direct stock pitches because that's about the process and the individual. But one came to mind, and I don't think you'll be surprised by it. And here's why I think it's a brilliant idea. And why it encapsulate, everything we've been saying. Often for young people in the holidays, you get the gift of games, and games are fun, and there's nothing wrong with getting a game. But if I'm really being my best Uncle Monkey Santa self, then you know what I would give my younger people? I would get them a Nintendo game, because the Switch 2, or, there's Donkey Kong, and the Switch 2 is just a great gift. It's what Monkey wants. Because Monkey's been a really, really good simian this year. But then I would also get them a share of Nintendo, not least because it pays a dividend. So once you get one share, that share actually keeps paying for itself, and I would explain, you're now an owner of Nintendo. You're not only getting this game, but you also get a share of the profits when anybody else buys these games. And to me, it's the perfect encapsulation of that mindset switch from just buying stuff to participating in wealth creation. Ticker, by the way, NTDOY on the US stock market.
Yeah, it's one of your favorite companies. I don't own it, but it's a brand that would resonate with kids and make sense. So you're right. That's a great place to start with the stock picking journey. I don't want to complicate this conversation, but maybe if you are going to be stock picking, you might want to find 10 ideas and spread your $200 gift, $20 into 10 different companies, one of which could well be Nintendo, because then you get diversification. Probably beyond the scope of this intro, where do you start episode? If you want to really get into that though, we answer that in other podcast episodes, and fire us a question on the X's or hit us up on Patreon and hit us with your questions. And we're happy to fill those in future conversations.
Awesome. That feels pretty complete to me, Badge. I think if we accomplish one goal, I think we set for ourselves one goal with this episode is to get people to legitimately pause before going out to spend money on material gifts, and to get them to think, I can do so much better by opening up one of these custodial or individual accounts and starting the process. If that's where we got you to, and you actually take that step, we've won. And then it's just about, the gift that keeps on giving.
And now, the reality is, if you're listening to this podcast, you're probably a subscriber or a Patreon, and you know this stuff already. But we've tried to do this episode in such a way that you could send us a link to this one as a one-off to friends and family. This is going out early December. If they haven't figured out what their Christmas gift is going to be this year, you could help them make their Christmas gift to their kid be the gift of investing. And maybe as the expert, you can hold their hand and help your friend or your family member along that journey. But yeah, fire them a link to this episode, and we try to make this real simple. If you want to make it even more simple and in 5 minutes, well, we were really crisp and clear when we did this last year in episode 60. So you could even go and listen to that. The advice is the same. Today we've been a bit more kind of conversational about it, and we've got a bit deeper on the why. The mechanics are the same. They haven't changed and they won't change for years. Opening one of these kind of accounts and buying one of these kind of indexes is just going to be the right decision for the next 20 years.
Yep. Here's a TLDR, right? You've just finished listening to this on your drive or wherever you finished listening to this episode. You're going to go home. You're going to open up your Chat GPT. You're going to say, I would like to give the gift of investing for my young person, right? Walk me through the steps, the exact steps I need to take to open up an account for my young person, and then follow what GPT tells you based on everything you've heard us talk about, and then you're done.
You know what, even why don't in the show notes, we'll put a prompt you can chuck into your Gemini or your Chat GPT that will give you the right kind of answer. So literally just go and when you get home from your drive, copy and paste what we put as a potential prompt and then go use that to get the answer. And I think 90% of the time it's going to give you a pretty similar answer to the one we've just set out for you.
Sweet. Badge, are you and all your young little baby badgers ready to become beasts of investors?
We are Christmas beasts right now.
A reminder that the people on this program may hold positions in the companies that are mentioned. Buying and selling stock carries financial risk, which could include loss of capital. The views in this program should not be taken as personalized advice. Before acting on any of the information provided, listeners are encouraged to consult a financial or tax professional.